Okay, what's up? Let's start a backtesting session real quick. I'm going to backtest on FX replay. What the and we go and backtest some market maker models on NQ and ES. So as you know, I trade usually Euro, GU, AU, but I'm kind of like dividing into a strategy that I like to like with Euro and these forex pairs. I am dividing to trade like this M15 strategy that needs to be in which all the rules needs to be fully met, and because I'm trading a 15-minute chart, it's not like it's always going to be trade day. And this forex person, I've been loving how NAS and US 500 or S&P 500 yes are moving at. Yeah. So let's just go through how these markets are moving with market maker models. Let's do that real quick. I'm gonna just that's there. I want the same tone, you know what I'm saying? I'll just put the canvas white. Grid lines, there you go. For some reason I like the grid lines. So how do market maker models work? Let's just have a real quick. So first you build some type of liquidity. It doesn't need to be like a consolidation like this. It could be just some like of external high. Then you start trading down. Okay, you displace down. You build more liquidity up here. More displacement down. You build more liquidity. Then this is at the point that you call smart money reversal. So then you kind of now starts the buy model where you would buy towards all of these highs and all of these engineered highs. And this is what you call a buy model. And so this is smart money reversal, and it's the point where you have to see an SMT. So meaning that this is your SMT. We're trading NQ right now. if NQ made high or low, we would need to see lower low on ES like this. That would be an SMT. Not only the SMT, we also need to see that in an area of higher time frame PD array. Higher time frame PD array, maybe like some, if this is like an 1 minute chart, we want to see like 1 hour or 15 minute bullish fair value gap somewhere here. That, and also the fair value gap needs to be, let's say this is the, there you go. So let's say this is the fair range, current range that we were trading in, and from here we kind of started to trading down there. So this market maker buy model occurs, let's say in 1 minute chart, and this is 15 minute range. This is 50 minute fair value gap. That is reasonable to expect rejection away from. So it's not only a high time frame PD array and SMT, we also like to see it trading in the equilibrium of the range or below it, concerning the fact that we are about to get into longs. And when you take a long according to market maker buy model, for example here or here, your initial target is this external high and the accumulation range high that you have here. And that's basically how it works. Same thing with the market maker sell model. But that's what we're going to do. I'm going to build my conviction with these. And last night I did do a little bit of backtesting with this already, and I'm gonna show you what I found here. So as you can see, I took 2 trades already, 3%, 1% win. I took, so NQ was 3%, ES was 2%, 1% win only. And you can see this ES trade as well here. It's 2R. How is it not 2%? Because I wanted to close at these highs. That was these highs were the high of the market maker buy model in my opinion. And I know it ended up running towards this higher time frame external draw, but it wasn't my interest to hold there anyways. And what I did in NQ was like, okay, you see the model here, it's not as always as clean as you might draw it, but you have your accumulation, first high, second high, then you shift in structure. Okay, what is this? Let's take a look at ES. Is there SMT? I believe there was not, but if you're looking at this as a whole, we are inside of a 4-hour order block at this point. So considering that, it's reasonable to expect a reversal. But yeah, in the best case scenario, you want to see the SMT here. Now we can see if we had any. Not really. There was a wait, what? There's the that was hourly chart that I was in. Sorry. So you can look like these are the most notable: low and high low, low and high low. No SMT there. There could be some like minor SMT with some minor lows. I don't know. Maybe you have this 845 candle low, which did get swept and here it didn't, so that could be some type of SMT, you know what I'm saying, but I don't really concerned that as anything great, but it's not that bad if you don't get SMT there, because this is not the point of our entry. Market is fractal, and you don't only see the market maker model on this M15 chart, you also see it as a smaller version on M1 chart here. And so that's because that is in New York session, that's where I entered and took the trade. So look at M1. It's not that clean again, but it is like this is the high. And remember that this was the overall draw. So this is the high in M1, lower high. Okay, you kind of do some weird shit here. You could deem this as the accumulation range, really, because just here we start to trade down. So high, lower high, came down here. I don't believe we got SMT either here either, but because we shifted in structure in high time frame M15 fair value gap, and this was also below the equilibrium of the range. Now some people could draw the fib all the way from here, in which case it's still bouncing away from equilibrium, so it's valid in both cases. Now you kind of have to test this out, whether the SMT is totally needed, because even like here we didn't really have one and we ran. But if you didn't have one, you can see what ended up happening. NQ ended up running to the external draw. ES ended up dropping. And what does that mean? When ES drops and NQ runs, there is huge SMT. Because ES external draw was also bullish. At this point, I'm looking at ES and I'm thinking, this looks pretty good. We have huge SMT. Because NQ failed to take those lows, but ES ran very far below those lows. This is an SMT. This could be your smart money reversal, because with NQ we cannot really get in at that point anymore that easily. But with ES, getting in at that point is totally reasonable, because you only have to really get like a market structure shift and like convincing fair value gap to go long from, and this is your break of structure to the upside. This is the best entry from that fair value gap. Have your stop just at that candle low. move higher with your target. So that's that. So we're going to move to next day New York session, and let's see if we can identify the market maker models. Got some coffee, let's continue backtesting. So let's just take a look how we look at how are we looking at so relative equal highs, that kind of gets swept, but if you have that high to that low, that's like small amount of points. So I cannot really identify here the market maker model. Maybe in daily it could be like sell side of the curve, buy side of the curve, here and here. But I don't really know if we are like, is this swept or not, or I don't know. I'm gonna just go to lower time frame and see if I can identify something. So this looks pretty much like a market maker model. The only problem would be that if you're going to buy, you would want to see market in the equilibrium of the range, so we cannot really see buys until that is hit. But yeah, I'm definitely still advocating for longs concerning all of this structure prior. And this daily hourly still looks like a market maker buy model. I'm not going to lie. ES is a little bit more extended to the downside, where it has like a little bit more room to run higher. But yeah. But the thing is, that it looks like market maker buy model, but this could be just a market maker sell model where it wants to run these lows after smart money reversal. So let's just look for SMT. Let's just look what kind of signatures market prints for us. So that time is right. So usually we want to start trading at 9:30 New York time when the market's open. Okay, that's a big SMT. Is this okay? So 15 minutes order block. I don't really see the model here. SMT is not a good enough reason to go into a long or short, meaning that I'm probably going to skip for the market open 9:30. There you go. So 16:29 market opens in a minute. So let's see what let's just quickly reassess our thinking. What I do think is probably that we will run down there, possibly. And if we would to run down there, then this would be market maker sell model, which this would be the external draw. Then you kind of create this low, engineer liquidity in general with here and here, and go for a lower draw. How's that looking in? Nah, yes. Same low, there you go. We're probably gonna run that, so let's just stay at 1 minute chart and let's see if we can spot any like notable signatures in price. Market opens. This could be like the initial manipulation, like a higher, because look, ES created almost equal. ES almost created equal lows there. That's pretty much equal. So this could, we are rejecting away from 5 minutes. This could be like an 15 or 30 second chart market maker sell model. And this could be, we are now in point where we see smart money reversal. Look at that precision, mate. That's just odd because ES was so much closer to take out that low, and now NQ is lower. But however, how do I look at this in ES? It's not SMT, it's nothing really. And if our external draw was lower with that 4 hour, I cannot really be thinking about longs there. The thing is just that if NQ takes that low, we could still target that low with. I don't really like the structure here. But if you're looking at this is bear gap. So we could technically get short there. And that could be like fine play. So we're just going to try this because we are backtesting. Look how we do, man. He played out pretty well. those lows were absolutely ran. Then this was an example of market maker model that's not that clean in my opinion. Like, not all of these are too clean, but the kind of the shape is same, where you start from here, kind of accumulate external low, low, high low, higher low, shift in structure, move towards that pro. Now we have a similar situation with yesterday, where ES is lagging very far away, which means is that either this is absolutely massive SMT, or like we are going to see massive drop and a lot of profits if this allows us to get in, because there is a huge SMT here again. And I almost see this as let's go to M15. So yeah, this is market maker sell model in action, pretty much. If this was a buy model, what's your external draw here? I mean, I don't really know. If I wouldn't see like any convincing setups, I would just stay out of the market since NQ already provided me. You know what I'm saying? So now, do you see any new models here? Because NQ is lagging behind and we are building liquidity up here. This could be a 1 minute buy model after a higher time frame sweep and a rejection from 4 hour. Maybe this could be a buy model, because we are having huge SMT. ES is running higher. First, that low, the first SMT bullish. Although there's like the indexes are not lining up like any single way, which I don't like, so I'm gonna just stay out. And this is what I mean. NQ ES ends up dropping for a whopping 120 points or something. That's pretty cool. Can we identify any other possibilities here? Well, I don't think that we need to run down there. Let's take a look. Rebalancing away from this. I would think that the buy model would be completed in weekly when we get like a proper sweep of that high. So I'm still thinking longs. I want to see like some nice wicking here. Okay, we don't see any of that, so I think this day is done away with. Let's see if we can like get any type of smart money reversal. I could enter a smaller position risk, because I'm not sure if I like to trade these hours. That's technically a bearish SMT with these highs. But yeah, no really SMT at the presumed reversal point. For the sake of it, just go to PM session and let's see if we can have anything. hourly fair value gap. Maybe that's your possibility. M50. Both these swept those lows. That's not SMT, unfortunately. I do see market retracing up here. So let's see what we can have. ES is much more extended with that previous price leg. I would just want to see like an SMT. I don't want to see shift now because these are a little bit too equal to my opinion. Okay, so that low. In NQ, let's just take a quicker look at this. So technically this is the lowest low. Same low with that there. So yeah, no SMT. But there is an again SMT with that. Watch, this could be a smart money reversal point. And because we have that kind of idea behind us that the M15 gap could be traded into, I could have, and I'm not sure about my entry model yet. Maybe my entry model would be that I enter from the IFVG. That's kind of what I like to trade. Or at least I like the idea of it. So yeah, this doesn't look very good at there. I don't know about PM session. Maybe I shouldn't trade PM session. Let's just move New York. Let's just trade skip to New York AM session, like the equity market open. And let's take a quick look. So we end up falling down. What do I think that's gonna happen now? I don't really know. If we are bearish extreme, then maybe that weekly. That could be your Well, yeah, we're bearish then. I don't know. Let's take a look if ES can give us some type of more convincing idea. Well, this is stronger low in ES. So that's probably targeted. Whether we are going long or not, I think that could be swept, since that's like a nice internal liquidity. But another thing is we don't really need to trade towards that direction necessarily. If we trade a 1 minute chart, that's not so much needed. So this looks like a buy model where you would run that high. And if I was so yeah, SMT here, that's your presumed reversal point. So again, if I was just longing based on these kind of thoughts, I would go long, but it's market open. I don't want to take a trade at market open, and also I want to see if there's like a high time frame area to reject away from, and I don't necessarily deem this as one, although we actually looking at this, we haven't swept too much liquidity, but this is actually a bullish gap, and we technically tapped into that. Plus, this daily gap, daily wick could be respected for our wick. These kind of abnormal wicks could be, it's like nice to have like projections of them and see if the consequent encroachment, aka the 50% level, is being respected or not. But yeah, in M1 looks pretty clean in terms of longs. So we're just going to try that out with a quick 1-to-1 R there. Market is opening, it could like forecast up, but this pattern, I'm just backtesting here, so you can see what ends up happening. You know, equities market open, indices, whatever you, stock market open. It brings a volume, similarly to news events, but it's not like it's still going to do anything like stupid. Like it's just going to run to your objection a little bit faster, a little bit higher volatility, but it's not going to do anything weird. Like again, I can take this trade possibly because the same draw is still here. It's not going to make any huge wicks even if it wants to run. And if it's going to make a huge wick, then it would have had done that anyways. So it just kind of makes the move faster to the wanted direction. But that was pretty good trade. One to 1.5. I did like that, and the market maker models kind of make sense, man. Like this even, it's like, are we going to run there? Maybe we don't have to, we sweep that high. But it's like, no, it makes total sense. And now this is a stall model, possibly. Possibly not, I don't know. I think NQ is kinda okay. There you see your drop. Preachers. So if I traded like an inversion model, that would be your entry, possibly there. We could target 1 to 2 R and that would hit. But yeah, that was nice and quick backtesting. We're going to take a look at what London session is probably going to do, because London session open 10 a.m. Eastern European Standard Time. So, which means in 1 hour. So let's take a look at EU. Let's quickly look at GU. So you can see what happened. I longed too early. Long here too early, man. I don't really know what to say. He was looking good. I still stand behind it. Again, break even. Not that bad. But I still stand behind my draw. It's looking like it's seeking towards that draw, meaning that I will be looking for longs in Asian after Asian session. This Ferrari gap and liquidity is being swept. Not that convincing though. Let's see what we can get. EU looking like this is exactly the market maker buy model that you want to see. Like where you get your, this is your sell side of the curve, and this would be your buy side of the curve. And now I was thinking like this is the market maker model, and then you would have sell side, buy side. But I just kind of entered too early. And in my opinion, I kind of saw everything that's necessary to see. So like, because that is the case, I had to take the trade. It didn't play out, but I hope that Lndon allows me to get in again. EU looks a little bit better than GU because GU is much more extended. EU has, in my opinion, it looks like it's more willing to retrace for some reason. So the draw liquidity is nicer on GU, I'm not gonna lie. That EU is just like that kind of weird shit, whereas GU is like proper daily high. So let's just see what's up. And if you're thinking market maker models with GU, EU, stuff like that, and the smart money reversal, where would you want to see the SMT? For example, you would hope that you see SMT with DXY in these lows, which means that EU made lower low, the EU created a structure like this, low, lower low. So DXY needs to create high, lower high, and this would be an SMT. So we need to see like so yeah, there is no SMT there. But again, I'm not sure if we need that. We liquidated that wick. I think this is an sell model inside of a buy model where you, this is a start of a sell model. You create low, okay, low, high, low, high, low, and then you, this is your smart money reversal point to go for that low, and then you kind of shift to buy model and go for those highs. I'm gonna look at Forex Factory to look for the news drivers. So I like this day. There is only medium impact news drivers. 9 a.m. That's the reason why Geo ran so hard. 9 a.m. news. And nothing else really, so I do like this. And let's say we got tomorrow we got unemployment claims on USD. That's kind of annoying because that's a time when I like to enter into trades, and when you got news drivers, it's annoying. But let me just show you something that I did when I was on vacation. I studied high impact news drivers and how they impact markets. Because everyone always says don't trade ready for news. But if you're looking at unemployment claims, there's only unemployment claims, nothing else. How do unemployment claims affect on price? Look at that candle. Like a small candle. Like a little bit bigger candle, but manageable. Yeah. So you can see how the volume is sometimes not there. Sometimes there's a little bit of volume, but if you are well, I will show you a situation where I could enter during news. But you can see how those unemployment claims don't really affect so heavily on price. And what I've put there, conclusion, the impact on market seems to be small because these news are literally released every single Thursday. So yeah, this Thursday as well. So you can see how every Thursday unemployment claims. Thursday, 1st of August, unemployment claims. Every time on Thursday. So pretty much how I would. So that was something. So let's say this was London session and it's about to be 8:30 New York time, and I want to enter in here. How I would utilize news is I would hope that, because unemployment claims is nothing that would push through all of these levels. It's kind of like it could push through this level, but it kind of doesn't get enough volume. So I would utilize it this way. Draw the range. We see that the equilibrium is somewhere here. How I would utilize it is, see this fair value gap. I'm just refining the points of price where I would be willing to go long. So I would just put my sell, a buy limit there, have your stop there, target that high, and hope that unemployment claims tag you in with like a wick and moves higher. Because the news drivers can give you a lot of these kind of low volume news drivers can give you just enough volume to kind of tag you in below your liquidity, because this is like an inducement liquidity to take that out and run then. So I wouldn't just enter from, let's say news are coming out in a minute, I wouldn't just enter from market entry. I would wait for I would look for a bias, so I want to go long. Okay, news tend to sweep some type of liquidity. If I want to go long, I want to sweep sell side. So I'm going to put my entry below a certain sell side liquidity pool, which in this case is here, so that when market sweeps that sell side, it simultaneously tags me in and then it can run. And that has happened multiple times, and I will show you it being happened the last Friday. I think EU was the nicest one. So I was looking at this EU trade. It was PPI, or what was it? So let's just take a look at what that was. So it was some type of news event that I had studied before, and I understood that it's not going to make any like massive moves. So PPI, and again, PPI is something you don't want to trade. Like if you are in a trade and it's in close to your stop loss or in drawdown, you should close it. It could run to your stop and kind of give you a slippage. But if you want to enter in a way that you can see in here, that could be totally reasonable. So let's just take again, look at it. So we got PPI. What is my conclusion? There are many instances when market doesn't move so huge, but trading to PPI can be a mistake because they can push price heavily sometimes. So you can see sometimes there is no movement, sometimes there's a lot of movement, but the movement is nothing like CPI or NFP. So how I figured things out is that PPI, it moves usually a lot, but it doesn't really change, it doesn't sweep the lows like that. So it draws higher anyway. So I'm just looking that maybe CPI can push price lower, manipulate, and that's why I saw this as an inducement liquidity, and I was just trying to get entry, so I entered. Or I actually missed this because I was on a trip, but I was looking at this on my phone. So you could have targeted all the way up here. I believe it's still not hit, but yeah, I would have just, because it's coming to, it's Friday, it's becoming a weekend, so you would just like to target that high and maybe try to enter from that extremity gap there and something like that. You can utilize the news entries exactly like that. That is very clean instance and a way of going along during news events. Just that news candle when that wicks you in, because you know the PPI, that's the candle. The initial volume happens already, so that when you get in, the initial volume of the news driver is already done, and you kind of just. But if let's say this was NFP, you wouldn't want to enter because NFP can do everything. It could just like melt down here and then start trading upside. It could do anything. Whereas with PPI, I kind of trust the structure that market has built. PPI usually supports a structure. It kind of plays within the general rules. Whereas let's take a look at NFP again. NFP doesn't really support the structure, nor does it follow it or respect it. You can see how the wicks are like massive. There's no way to enter in this. Usually in PPI days also the Lndon session prior moves very badly, so that's another reason why you cannot trade this anyway. Yeah, the candles are just like abnormal. And there is not a single instance when I would recommend taking an entry, but the PPI, again, when you know what you're doing, this kind of limit entry during PPI candle is totally reasonable in my opinion. But yeah, I think we're go on and the charting session here. I will be looking at longs during Lndon session. As already told, if London kind of starts to go upside, doesn't take the Asia low, I will reassess my thoughts. Maybe if we create some very convincing, like 30-minute or hourly fair value gap to the upside, maybe I could still go long. But as of now, I want to see it sweep that low, and then only I can look for longs. So that's my conviction for the day. Let's see what we can get. We got those unemployment claims news tomorrow. Today, nothing notable is happening in terms of news drivers. These medium impact news can bring just nice amount of volume to the markets, but nothing that you would notice that much. So we're going to end the session here. I might be back during New York session, and I will definitely post